Hi, everybody. Welcome to all joining us. I'm Joe McMoneagle, the Secretary General of the International Energy Forum. Today, the IEF releases our first report as part of a new research initiative on post-COVID recovery and energy markets. I'm pleased to be joined by my new IEF colleagues responsible for the report, our Chief Economist, Dr. Leila Benali, and Energy Analyst, Allison Cutright. I also want to give a hat tip to our colleague, Mason Hamilton, for proposing the initiative and his assistance with it. The first report utilizes alternative metrics to estimate demand for transportation fuels, obviously a critical sector for oil demand. And my colleagues here have examined combined data from JODI, the Joint Organizations Data Initiative that the IEF houses, Google's Community Mobility Tracker, and Oxford's COVID-19 Government Response Tracker, and vaccination rates to assess gasoline and diesel demand's recovery. Data was available for 65 countries, accounting for 80% of global demand. And I think one of the main findings of the study that my colleagues will get into is that gasoline and diesel demand rebounded to about 93% of pre-COVID levels in March 2021, so last month, from about 87% in January 2021. About 35% of this volume gains were driven by the US and India. On the other hand, many European countries' mobility lagged 20 to 40% below the January 2020 baseline. So while the recovery from the sharp demand drop a year ago in April 2020 until now has been impressive, the last mile, as we say, for the demand recovery remains uneven and fragile. For the IEF, based on this study, we believe these non-traditional demand metrics can help improve data transparency and provide insight into real-time demand recovery. Better quality and more transparent data in the energy sector are critical to improve national economic decisions, production policies, and consequently investment decisions. The IEF will continue monitoring these different metrics to track the recovery of the missing 5.2 million barrels a day in global transportation fuel demand that breaks down to about 2.8 million barrels a day for gasoline and diesel and 2.4 million barrels a day for jet fuel. But now let me turn the program over to Dr. Leila Benali to lead the discussion with her analysis. Leila?
Thank you very much, Joe. Thank you. Good afternoon. Good morning, everyone. I'm trying at the same time to share my screen. I think it's exciting indeed. Thanks to Mason, who proposed the original idea, and it was indeed quite difficult to execute the idea, as we say. And there's a reason for that. It's very simple. We are standing in April 2021, and I think all the agencies whose job is to track energy demand, energy supply, and economic recovery would agree that it's quite difficult today to assess the trajectory of economic recovery, the trajectory of energy demand, and the traditional linkage between the two, and the implications of these would have for production policies, for corporate business plans, and indeed, as Joe mentioned, on investment strategies. Remember where we were same time last year. There was a spectacular collapse in global oil demand by 25% in the so-called Black April to levels last seen in 2002. The recovery has been equally spectacular, quite rapid and quite difficult to see. But that last mile that Joe has referred to get back to pre-COVID levels has been slow and uneven. And our goal out of this analysis is really to dissect this last mile. So on aggregate, we are looking at an absolute world demand of, let's say, 96, 97 million barrels a day on average in 2021. That is still lower than the 101 million barrels a day that we averaged in 2019. And the transportation sector, and that's the reason why we care, as a sector, it was disproportionately impacted by COVID-related restrictions, as we all know, and is the main reason why we cannot get back to pre-COVID levels this year. Where do we stand on economic recovery and oil demand growth? A couple of words on that. If you've seen all the three organizations which the IEF includes in its monthly comparative analysis, OPEC and the IEA and the EIA have increased and aligned their assessment of oil demand growth this year. So we are looking at a growth of 5.7 to 5.9 million barrels a day in 2021. And if you remember, as my kids would say, during normal times in the past 10 years before 2020, oil demand has been growing at 1.5 million barrels a day on an annual basis. So we are this year looking at roughly 6 million barrels a day of growth. These agencies are all aligned with, of course, the IMF hypothesis of global economic growth of 6% this year. That's also a stronger projection than the October World Economic Outlook. In reality, the drivers of growth and the uncertainties have not really changed. And I would think what has changed is this increasing awareness of the divergence, the increasing awareness of the divergent paths for economic recovery, divergent paths of the management of the pandemic. And that's something that my colleague Alison and myself are going to show you in more detail today. So you have on the economic side, on one side, few large economies like the US with massive stimulus plans, possible rebound in consumer spending, those consumers who saw their savings improved because of limited spending during the pandemic and dynamic stock markets. Let's remember that as well. So the IMF tells us that the US might be the only large economy to become larger in 2022 than it was supposed to be, that it would be in the absence of this pandemic. You also have in the middle those countries, for example, in the Middle East and Asia Pacific, which have been quite effective so far in their containment of the pandemic. Australia and New Zealand announced, they opened today their travel corridor. And you have on the other side of the spectrum, of course, economies with much slower vaccine rollout, more limited or less effective policy support, or economies more reliant on tourism, more reliant on cash-based services, or even worse, on informal sectors. So naturally, the area where these three agencies are diverging today when it comes to oil demand growth is understandably non-OECD demand. They have a difference of 360,000 barrels a day of demand growth, and that's roughly the consumption of a country like the Philippines. Therefore, I mean, for us, in order to have an immediate understanding of, and a real-time understanding of the last mile of recovery, we're starting with transportation fuels, of course. As Joe mentioned, we combine data from Jody and a few other trackers, including Google Mobility, Oxford COVID-19 government response, and vaccination rates to really assess transportation fuel demand. And some of the, I would say, the key findings that we had, and we'll give you more details during this call, during this webinar, we rebounded in March 2021 in terms of gasoline and diesel demand to 93% of pre-COVID levels from 87% in January 2021. And surprise, at the end of this presentation, we will give you a sneak peek into how the numbers look like if we add to it the first 2 weeks of April. We've noticed some regional differences, of course, 35% of the volume gains driven by the US and India. You have many European countries where the mobility is lagging below 40% below the January 2020 baseline. And in China, we noticed a serious pickup, even if you lack mobility data there, compared to the fact that passenger traffic has declined 45% last year. We are looking where those 5.2 million barrels a day are still missing. Jet fuel is obviously takes the lion's share, as you will read in the report that is being issued at the same time as this webinar. You can refer to it on our website very soon. And road transportation fuel demand could reach pre-COVID levels in 2022 on aggregate. Of course, we will continue monitoring this, what we call these traditional, non-traditional metrics during the rest of the year, particularly with how they will evolve during Ramadan, how they will evolve with the summer vacation travel patterns, and how they will evolve with the wider economic recovery. So we took Jody data, of course, and we looked at how they behaved for gasoline and diesel demand, more particularly in January compared to April 2020. And we saw that for the demand patterns and has been quite uneven and quite asynchronous. And that was quite difficult for us to find a common pattern across all these countries, because if April 2020, Black April, saw the lowest aggregate monthly demand at the lowest at the aggregate level, not all countries bottomed then. So we had to ensure that we are looking at those countries depending on where they actually started, with the wide difference between Asia and the rest of the world. Among the top 20 gasoline and diesel consuming countries, of course, India has made an exceptional recovery since last April, from 1.1 million barrels a day in April 2020 to 2.5 million barrels a day in January of this year. However, as you know today, India is fighting a double mutation, and we don't know yet how that will evolve over time. In Germany, demand has plummeted to a new COVID low, and in the UK, it remained near April lows. I will switch to the first metric that we used. We combined with the Jody data. That's the Google Community Mobility Report, indeed, which is based on data from users who have enabled location history on a Google Map app. The index compares the daily number of users at different commercial locations to January 2020 baseline data. Of course, it is not a comprehensive reflection of all transportation fuel demand, but we realize that it really captures the trend of a subset. It also lacks data for China, which is the world's second largest oil consuming country. And my colleague, Alison, will show you our methodology for all those countries where mobility data is lacking. But for many countries where data exists, the index has correlated relatively well and very strongly in some cases with the Jody gasoline and diesel demand. And Alison will guide you through the statistical dependence between these quantitative variables that we looked at and how they unfold in some of the countries that we covered in this analysis. Alison, the floor is yours.
Thank you, Leila. So going to the next slide, going to dive right in, and again, looking at the comparison between Google's community mobility reports and Jody gasoline and diesel data. And as Leila mentioned, it's not a perfect indicator. It only represents a subsection of that demand. But despite being an imperfect metric, it is still useful. In times of a market dislocation, traditional models break, and it's imperative that we use the resources available. And our study shows that the Google mobility data can not only provide insight into the directionality of demand, but it can even help us quantify the actual change in demand. There were 57 countries that had both Jody gasoline and diesel demand data, and also had the Google mobility data. And we're going to go here to one of the first countries that we looked at. I'm going to move through the country levels pretty quickly. I just want to show how the methodology can be used across all regions and varying sizes of consumers, and we'll also highlight a few trends as we go along. So in the US, it was one of the major drivers for gains in March. As I mentioned, along with India, they have the US and India have driven about 35% of the gains over the first quarter. And this is also consistent with what we've seen in EIA's weekly data. It shows about a 500,000 barrel a day month over month jump in gasoline and diesel demand. I would also like to take a second to note the January data point in here for demand. We're using Jody data, and since Jody data was released, the US EIA issued a final demand data, which actually came in under Jody data, about 200,000 barrels a day. So it shows a month over month decline actually in demand data between December and January, which would align very well with what we see in the mobility data. So that's just another example of how the mobility data is actually proven to be a leading indicator in how we can assess demand movements. In the preliminary data for April, for the first couple of weeks, we've seen continued improvement in the US with mobility up about 2.5 percentage points so far over the March average. If we move on to the next slide, take a look at India. India's made a remarkable recovery since last April. And January gasoline and diesel demand was all the way up to 97% of pre-COVID levels. Mobility has pulled back a little bit in the beginning of April, which is consistent with the surging COVID cases and renewed lockdowns, but we're not seeing a collapse in demand. The mobility, the latest 7-day average for mobility is around January's level, about 11% below the baseline. So that, if that holds, that would be about 150 to 200,000 barrel a day drop in gasoline and diesel demand month over month if mobility is a leading indicator. Looking at the next slide, Mexico, again, we've seen a great correlation between the Google mobility data and gasoline and diesel. In December, gasoline and diesel demand was just at 73%, so well below even the average level. We saw a dip in January, but it's recovered the last 2 months. And April so far is up slightly from March levels. So making progress there. In the next slide, take a quick look at Turkey. Again, the correlation between the Google Mobility Index and gasoline and diesel demand has been very strong. And we also saw a strong bounce in the first quarter with March levels back up to near summer levels, which actually demand was higher than pre-COVID levels. So we should expect to see the same in March. April mobility is averaging about 1% lower. So we'll be watching that for a potential pullback. And then the next slide is Saudi Arabia. And again, Saudi Arabia has also seen a sort of steady increase in mobility and demand. And gasoline and diesel demand were at about 85% of pre-COVID levels in January. And the mobility index actually implies that demand may have reached pre-COVID levels in March. And mobility so far for April is up about 6 percentage points. So the gains here are helping offset where we're seeing pullbacks in other countries. That's another one we'll be watching closely to see sort of if the pattern changes with Ramadan. And then the next slide is sort of our last country level that we'll cover here. And this is Slovakia. And again, can see how closely the Google Mobility Index has moved with the gasoline and diesel demand. And we've also seen sort of improvement over the first quarter here. Again, we conducted this exercise for 57 countries across the globe, and the OECD, non-OECD, large, small consumers. This is free, publicly available data that we're able to use and sort of assess the real-time changes in demand. And it can be used to further data transparency and sort of track this last mile of slow and sort of uneven recovery. As Leila mentioned, we are unfortunately missing either product level demand data or mobility data for countries that cover about 20% of global demand. and this includes China. But there are other metrics that we can use to at least get an implied directionality for demand. And if we go to the next slide, we see an example of Oxford's COVID-19 government response tracker. And it sort of assesses the stringency of government response policies. And China is included in this assessment. So if we look here, China's the dark black line, and it declined pretty sharply actually from the end of February through March by about 20 points. And the stringency index has a strong inverse relation with both mobility and demand. So this fall in stringency implies higher mobility and also a pickup in demand. And then one last metric we looked at were vaccinations. We wanted to see if in areas where the vaccination rates are high, whether or not those governments are already loosening their policies and imply a pickup in mobility and demand. But we found that it's actually too early to use the vaccinations. Several of the countries with the highest vaccination rates continue to have the most stringent policies. And so those countries are also seeing continued reduced mobility and demand. That may change as things go on. It's something we'll be assessing, but right now it is a weak metric. So wrapping up, I just would like to emphasize that, despite all the nuances and contingencies in the data, these non-traditional metrics are showing a very strong correlation with final gasoline and diesel demand data, and it can be used along with other tools to quantify real-time demand trends. And better quality, more transparent data in the energy sector are just imperative to improving domestic policies, production policies, and investment decisions. And so with that, and sort of hinting at sort of what April data is doing, I'm going to hand it back over to Leila to give sort of concluding remarks and to take any questions.
Thank you, Alison. And I see that there are already a couple of questions on the chat, so feel free to send your questions. We will spend some time on addressing the Q&As, either on the methodology or some of the conclusions of the study, and of course the future of the study as well. So with the methodology that Alison has described, we reached a conclusion that at least for March 2021, for the 57 countries which cover 80% of global demand, we are standing at 93% of 2019 levels for gasoline and diesel, for largely transportation fuels. So we were curious to see what we would have with the first 2 weeks of April. The issue is that it's even more uneven and even more asynchronous than before. Mobility has really fallen across parts of Europe, India, of course, as we mentioned before, and Chile in recent weeks, and picked up, as Alison pointed out, in some very important regions for oil demand, including the Middle East and Africa and Russia. So for the first 2 weeks of April, what we saw is potentially a stagnation of the transportation fuel demand recovery. But of course, it's very early to say how things will evolve between now and the end of the month. And as I mentioned many times in the past, a lot of this is dependent on country policies which remain flexible and reversible as countries are fighting new variants or new mutations of the virus. So if you add to it the increasing disparity between regions and countries, we're also looking very carefully at what is happening in the aviation sector and how jet fuel is evolving all the time, because as I mentioned, this is really the lion's share of the 5.5 million barrels a day that are missing in transportation fuel demand. Long-haul flights, which are more than 30% of fuel used in aviation, show very limited sign of recovery in 2021 or even in 2022. And we still see potentially those pockets of recovery for regional and domestic flights on a very, very slowly in specific regions, or as we saw today between New Zealand and Australia, some travel corridors in countries with similarities in terms of pandemics management. So jet fuel demand is very much expected to remain in that 5.5, 5.7 million barrels a day during the first half of this year, at least until the summer. And you have to compare that to an average of 7.9 million barrels a day. So we have like roughly 2.5 million barrels a day of demand for jet fuel that is missing. These are the two main reasons why it's our assumption we cannot get back to pre-COVID levels this year for transportation demand in general. And the last mile that we have talked about in this webinar will be longer. So with now, I would like to move to, I'll stop sharing the screen. And I would like to move to the Q&As. And I see there are already a couple of questions. One coming from our friend, Mark Finley, of course, on India, Turkey, and a question for, I guess, Alison can address this one. I note there was a large gap between Google data and subsequent Jody data for the pre-COVID months, January and February 2020, of course, particularly for those countries that are outside of Asia. Is there a potential reason why there would be a closer correlation in COVID and perhaps going back to weaker correlation as we get back to normal? Correlation does not mean causality, yes.
Yeah, exactly. So that is a really good question. And I think it has to do with, again, that the mobility is only seeing a subset of that demand. And it's that subset that is doing a lot of the moving right now. So we are able to see the trajectories line up a little bit better during the COVID times. I would expect that to maybe break down again after COVID once more traditional models and with it being driven more by economic growth could see maybe a bit more of a disconnect, but it's something we'll continue to monitor. When I was trying to light things up to find the correlation, I was focused mostly on sort of the collapse last spring and the subsequent rise, since that is the portion of the time frame that we were most focused on. But I think it has to do with it being just a subsection of that demand.
Thanks, Alison. One question that I got from WhatsApp actually is how do we treat diesel demand? Because, and I can take that one maybe, because diesel demand doesn't all go for ground transportation. And how we treated it. So basically, again, I mean, the correlation was there, taking into account all gasoline and diesel demand that goes into Jody data. And diesel demand globally is 70% of it goes indeed to ground transportation. So from that perspective, we actually, it confirmed the correlation that we saw. And even if in some specific countries you will get diesel that will be used either for electricity or other purposes in industrial utilizations, in general, we found that the correlation worked quite well for most countries. And also, mind you, I mean, an industrial or actually more increased utilization of diesel in non-transportation utilization would imply a renewed activity in the country as well. So there is, at the end of the day, an indirect correlation between the two.
Layla, hi, it's Joe. I got a WhatsApp question also. People are sending us WhatsApp messages, and I think it's someone who may have missed a slide or came late. But it's probably worth bringing up again. Just the question was about India and the new wave there, and how that might change. So maybe just highlight, what we saw in the data, and then the first 2 weeks of April might be worth talking about that, highlighting again.
Do you want to take that one, Alison?
Yeah, I'd be happy to. So India was a large driver of the growth in the first quarter, but the renewed lockdowns have caused a pullback in mobility. We've seen mobility over the first 2 weeks go back to about about 11% below the baseline level. And that would imply that demand is headed back towards January levels if it stays there and doesn't drop any further. And then that would imply about 150 to 200,000 barrel a day drop in gasoline and diesel demand between March and April. So we are seeing that pullback in the mobility and would expect that in demand data.
Thank you. And I'll tackle the other question on the chat about basically, would this suggest that gasoline diesel demand won't rebound as aggressively as mobility indicators as we move out of COVID? That's a huge question. When are we going really to move out of COVID and back to normal between brackets? Yes, I think it's a very interesting question how the normal, I mean, again, between brackets, how long it will last. And I think there will be, I think that suggestion might be true, actually, might be factually correct, because this last mile is going to be longer, is going to take longer in terms of demand, even if mobility comes back to a relatively normal level, regardless of what we define those normal levels are. But it's true that if we want to speculate, again, beyond the summer of 2021, which is a very difficult summer to project, I think you might find a situation where gasoline and diesel demand, transportation fuel demand, might not rebound as aggressively as mobility indeed. Do we see any other questions? Joe, would you have other questions yourself, Joe?
No, I mean, I thought that was a terrific presentation. I think the one area that is worth highlighting again is also China and what you talked about in terms of the how we went about assessing the situation in China. I guess wondering both of your thoughts about whether China is China sort of the example for the rest of the world in terms of demand recovery.
Would you like to start, Alison, and I'll complement?
I think China is a very interesting case that I'm not sure the rest of the world can completely imitate the recovery that we've seen there. I mean, despite total passenger throughput dropping 45% last year, total demand in China by most indicators shows that it was up, which is pretty tremendous. And we've seen continued improvements through the first quarter. Sure, Leila, you have anything to add there?
No, I remember, Alison, our very first, actually China was our very first dilemma that we faced when we started looking at the numbers. And it's true that because it was the very first slide where we showed the January 2020 data, and we talked about the fact that even the drop was asynchronous. And it's very clear that because China and a few other countries started the lockdown much earlier than the rest of the world, it was, you would assume that today, because they would be the first ones to get out, to use Mark Finlay's words, to get out of COVID or to move out of COVID, you would assume that they could be used as examples for the rest of the world in terms of demand modeling. But at the same time, the numbers are totally skewed by two factors. First, because we didn't have access to mobility data, to public mobility data. So that's number one. But number two, even if we had access to public mobility data for China, I'm not sure it will, the correlations would be showing the same patterns that we saw in other countries. And I think it would be very interesting to see how things would have evolved. I mean, ideally, what we would like to have in China is a regional view of mobility, plus a few of the other metrics that we have to make this study very appealing and use it as an example for the rest of the world, indeed.
I have another question, but this is sent from a very wonky viewer, and it's I think it's a softball for you, Layla. What messages do you have for those countries who submit Jodi data but don't have any recent data? So this is as someone going to be supervising the Jodi program here. Maybe you have some thoughts.
Oh, well,
because we only had data for how many countries? Jodi data, right? Recent Jodi data.
57, yeah.
57.
57, and you have 20 for whom it was not submitted on time, and some of them, without citing names, do not have data for basic demand dating back for the last year or so, more than a year. So, and some of them are actually either large consuming countries or countries where there has been a quite exceptional demand growth rate. So it would be good to have they basically move the needle when it comes to assessing demand growth. So in times of a market dislocation like we are today, we would really appreciate to have a better understanding of all the main countries, but big or small. Actually, there's no big or small country when it comes to Jodi data, because again, as I said, even if the absolute number might be small, the growth pattern is very important for us to understand it. That actually improves transparency on data. And if we want oil and gas to become relatively normal commodities with less volatility that is affecting producers and consumers, I think it's high time that everybody submits its data as early as possible and as timely as possible. And that applies for supply and demand as well. So again, I mean, for the majority of countries that we cover, we would really appreciate to have not only for the producers and consumers, but also for the smaller countries, the transit countries that are dependent on those oil and gas flows. We really appreciate to have a much better and much more transparent understanding of where energy is going.
And of course, provides opportunity for some informed decision-making at a really critical time coming out of the global pandemic, hopefully, and a smoother recovery. So thank you for that. I don't see any more questions.
All right. I think we will have to. I think we will have to conclude as we stand now. The report will be available in the next 10 or 15 minutes on the website and of course on social media. If you have any questions, thank you very much.
We have printed copies here.
You have to be a Riyadh to
Yes.
get your copy.
Soon, everyone will come.
Absolutely. But the question that we're having also is whether we are going to update the analysis. Well, two things on that. First, this is in a framework of a wider understanding of post-COVID recovery, post-COVID energy recovery. So we started with transportation fuels, and our plan is to look at the other fuels and the other parts of the energy sector that have been heavily affected by the pandemic and by the crisis that we are facing today. And when it comes to transportation fuels more particularly, we will definitely keep watching some of the main metrics that we discussed today. And particularly after, as Alison said, after Ramadan, after the summer driving season, the summer travel season, hopefully a resumption of schools in September, and then we will let you know how we see those metrics evolving, and whether if the last mile have closed, we won't see the need to update the study. If the last mile is still if the gap is still wide, we will definitely update the numbers. Thank you very much for your attention, and I'll pass it back to Joe to say the last few words. Thank you.
Well, thank you. Thank you to both of you, and congratulations on the report. And thanks everyone for joining. As Layla said, the report will be available on the IEF website, and I think a replay of the webinar will be on the IEF YouTube channel. So thanks again, and have a good day or morning wherever you are.